Welcome back to Dinar Current. Iraq is an incredibly resource-rich country. Considering its relatively small size, its natural wealth is extraordinary, estimated at around $16 trillion. According to a government advisor, Iraq ranks first globally in terms of the density of its natural resources. It's not a huge country geographically, but the value it holds is immense. This richness based on concentration makes Iraq unique on the world stage. For those who believe that investments involving Iraq are a scam, there could be a major surprise ahead. Have you ever thought about how currency works in different parts of the world? Especially in a place like Iraq, where the dynamics of money can be particularly fascinating. Today, we're going to explore a specific topic: what happens when you own a 50,000 dinar note in Iraq? Why is its value so different depending on your location? Let's dig deeper into the real value behind that note. Understanding how exchange rates work is crucial, even though it can sometimes be confusing. Knowing how the value of your money changes across different markets can help you make smarter financial decisions. Let's begin with the situation inside Iraq. The Iraqi Dinar (IQD) is the national currency, and its value relative to other currencies, especially the US dollar, can vary. For instance, within Iraq, a 50,000 dinar note might buy you goods and services equivalent to around $30 - $40 USD, depending on the local exchange rate. However, the story changes dramatically when you take that note outside of Iraq. If you try to exchange it internationally, you may find that its value drops significantly, or that it's nearly impossible to exchange at all. This is because the Iraqi dinar doesn't have strong recognition in the global currency markets like the dollar does. Picture this: you travel abroad carrying your 50,000 dinar note, expecting a decent exchange value. Instead, you find out it's worth much less, sometimes only a few dollars, or no one will even accept it. Now, let's talk about the idea of a floating exchange rate. In a floating system, a currency's value is determined by supply and demand in the market. If Iraq were to move toward a true floating exchange system, the dinar's value could rise substantially. In a dream scenario, if the dinar matched the dollar at a 1:1 rate, your 50,000 dinar could be worth $50,000 USD. But there's a major catch: governments often intervene to stabilize their currency. They might cap how high it can go to avoid economic shocks. Rapid rises and falls in currency value can hurt citizens more than they help, causing inflation or making basic goods unaffordable. What does this mean for everyday Iraqis? If the dinar strengthens internationally, people inside Iraq could enjoy stronger purchasing power. However, if it weakens, imported goods could become more expensive, making life harder. Take the real-life story of my friend Ahmed in Baghdad. He had saved a 50,000 dinar note, thinking it held significant value. Locally, it bought him a lot. But when he traveled to the United States, he discovered it was worth only about $33 at an exchange center. This moment made him realize just how important it is to understand currency value fluctuations. If you're living in Iraq and thinking about exchanging your dinar internationally, it's crucial to stay updated on current exchange rates. Local banks often post rates daily, and there are many online platforms where you can check live updates. Timing your exchange carefully can make a big difference financially. Also, keep in mind the bigger economic factors like inflation, political shifts, and global market trends. These all influence the value of the dinar. A large note like the 50,000 dinar might seem impressive, but always assess its real purchasing power, both inside and outside Iraq, before making major financial moves. Now, let's touch briefly on the World Trade Organization (WTO). The WTO was established to promote fair international trade by lowering trade barriers and settling disputes, not to manage currency exchange rates. So why do some people think the WTO will help Iraq's dinar? It's a misunderstanding. While improving Iraq's global trade relations could benefit its economy, managing currency value is beyond the WTO's role. Economic factors like inflation, monetary policy, and national reforms are what shape a currency's strength, not international organizations. Depending too heavily on external help can actually be dangerous. Look at Greece's economic troubles. Heavy reliance on outside assistance delayed necessary internal reforms and worsened their situation. Iraq must prioritize strengthening its economy from within. Invest in industries, Enhance education and workforce skills. Foster entrepreneurship and innovation. Build smart economic policies that encourage sustainable growth. Engagement with global organizations is helpful, but Iraq should maintain sovereignty over its currency and economy. Building internal resilience will prevent long-term dependency. This lesson applies to many countries, not just Iraq. Global support can be valuable, but it shouldn't replace domestic efforts. What's your opinion? Should the WTO get involved in currency matters? Leave your thoughts in the comments. If you found this discussion useful, make sure to like, share, and subscribe so you don't miss future updates. Understanding currency isn't just about numbers, it's about protecting your financial future. Let's keep the conversation alive. What are your thoughts about currency values? We value your feedback. See you in the next video.